back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host, Mr. Kevin Hinks. But let's bring in our next guest, Kev, and that's going to be Andy Swan. He's the co-founder of LikeFolio.com. Thanks for joining us today, Andy. We're talking Peloton. Now, all disclosures, I do have a Peloton tread that I just got about a month and a half ago, and it hasn't helped the stock. Stock's down over 40% so far this year. Andy, what are you guys seeing as far as data goes? Because it seems like people are joining gyms. Planet Fitness came out with a decent earnings report today.
Yeah, Planet Fitness coming out with that report really kind of confirmed what we're seeing at LikeFolio from the macro data perspective in terms of the number of people talking about working out at home. We saw, of course, a really big spike into the beginning of COVID, followed by what looked like really nice elevated levels for quite some time. And the working out from home trend lasted, I think, a lot longer than people expected. But now we see that down 45% year over year, complete normalization of this trend, which bodes well for Planet Fitness as people get back into the gym, does not bode well for Peloton. And we see that really clearly when we look at Peloton usage. We see just mentions of people talking about using their Peloton down 14% year over year. The number of people about actually purchasing a machine down 51% year over year. And so really what's happened is a major shift in consumer behavior away from working out from home. Peloton really did a great job pulling forward that demand. They kept up for the most part. There were some delays in deliveries early on, but overall they really capitalized on a massive macro trend. But unfortunately, that massive macro trend that was a tailwind before, we think is now becoming a headwind, and it's going to be very, very difficult for this company to even come close on year-over-year comps for quite some time.
Andy, between 2017 and 2021, this company's revenue nearly doubled every year, and it went from $219 million to $4 billion in revenue. Now, the controversial thing, obviously they've had a couple of missteps with the treadmill. Tom, be careful. Good Lord, be careful on the treadmill. But when you look at what one of their bigger moves was, they lowered the price of the bike, right? And lowering the price of the bike may have made them more competitive, may have cut out some of their competition, right? Because what brings competition into a marketplace? High prices, right? They preemptively lowered the price of that. The question is, Andy, and I wonder if your data shows this, I mean, obviously, there's been a lot of demand pulled forward. There's nothing you could do about that then. There's nothing you can really do about it now. But here's the question, Andy. Did the price drop that they implemented, did it help their sales and help fight off competition?
Yeah, I think it had to have, and it, brought more people in the door. The other thing Peloton is really good at is bringing people into its ecosystem via its app. You don't necessarily have to buy one of these expensive machines in order to be a Peloton community member, even a paying member of their services. So they have a huge list of people to market to. They have an almost cult-like following. I wouldn't call it, Tesla level, but it's almost cult-like following. 85% consumer happiness we see at LikeFolio. So I do think the company's making the right moves, in terms of broadening its appeal and like you said, cutting competition out by lowering prices and that sort of thing. It's just at a really tough point right now. It's a great company that's at a really difficult point, and that happens sometimes. So for long-term investors, that can be a great opportunity. For short-term investors, it can be a huge risk.
Yeah, and Andy, on your, your mentions on your data, I like the tail end of that that graph is that you put in the word normalization, right? Instead of, that peak that we saw during the pandemic, you expect that, right? But that normalization doesn't mean it's really negative data that you're seeing. It's just
Right.
what you should be seeing, correct?
Yeah, that's right. It's kind of back to where we were before, before COVID happened. There's an enormous bump in there, but the graph right now is something that does concern me. This is the number of people talking about using their Peloton. So Peloton is very heavily reliant on subscription revenue. People get the machine, that puts some money in the bank, but it's really that recurring revenue that Peloton gets. And the less people are using it, the more likely churn is going to rise. So that's something we're going to be watching into this earnings call very closely. I think that last month we saw some of the lowest numbers of average number of workouts per user that Peloton published. So there is concern that not only did they pull forward all the demand in terms of machine sales, but now we also might be getting into a part of the cycle where churn increases because people are just using the machine less and less.
Yeah, Andy, one more discussion point here. And you mentioned, I think, what's the key to their future, and that is subscriptions, right? That monthly number that comes in and fuels the education in all the classes. But when you talk about their numbers decelerating, right? Their expectations, their guidance for 2022 is $5.4 billion in revenue. That's a 35% increase. So you're right. They're decelerating probably from levels that they couldn't sustain over a long period of time. But this company is still growing. But that doesn't help the fact that the stock seems to have fallen out of favor. How do we connect the dots between where the stock has fallen to in terms of Wall Street watching it and where the actual numbers are that still seem your data shows it normalizing, but normalizing at some fairly good numbers.
Yeah, no, I completely agree. I think that what happens a lot of times is, at high growth rates, like you were saying, doubling every year, that can lead to really lofty valuations. The ratio that people are willing to pay for the stock can be much higher. And so even if the bottom line or top line grows, but the ratio of what investors are willing to pay, the price to that, if that drops, then the stock price can drop significantly, even into a growing revenue stream and growing profit stream, which I think is the case with Peloton. I think we have a lot of risk in the near term with this stock. Some of it's already priced in. I'm not sure all of it is. But long term, this is a company that knows its customer really well, and they produce really, really good equipment and really good experiences. So I think long term, this is one I really like.
So long term, you like it, Andy, but what's your earnings score on this one going into this report tonight? Because we're expecting a pretty big move of about 8% either way.
Yeah, I would put my earnings score at very concerned, very concerned going into earnings. I think now is probably a good time to be talking about potentially a hedge or something like that into this earnings call. It's going to be tough.
Yeah, I think a lot of people are expecting that with the stock now down 40%. So we'll have to look for those numbers. All right, Andy, thanks for all the great data here on Peloton.
Thank you.
All right, that's Andy Swan, the co-founder of LikeFolio.com.